Mohammad Khan is an insurance expert with the accountancy and business services firm PwC. So, Mohammad, good evening to you. What have the government done exactly?
So what the government have announced today is that they are going to change the mechanism for the Ogden discount rate. So previously, they announced at the end of February that the rate would be minus 0.75%, and they've announced that they're going to put a bill through that will change it to possibly between 0 and 1% if the bill is passed.
And the Ogden discount rate, for those who don't know, is what?
So that's the rate that they use to calculate how much you get paid when you have a really, really bad injury. And the point was that the rate used to be 2.5%, and it dropped to minus 0.75%, which basically meant that what you got paid when you got injured went up by 4 or 5 times.
Yes. So, and effectively, that's a reflection of the fact that interest rates are at ultra low levels. But
correct.
Blew a hole in the insurers' profits potentially.
So there is that angle, but I think the key thing for anyone watching is that actually it increased the amount of money that we had to pay for our motor insurance premiums. So on average, if insurers had passed on all of that cost to us, our premium rates would have gone up by about £200 on average.
Wow. So how much do you think they'll go up by now?
So in reality, what happened was when the Lord Chancellor made her announcement at the end of February, insurers moved some of the way there. So the rates only went up by about £50 to £75. So by partially reversing it, we're not going to get the other increase through.
I guess the flip side of this, though, is that people who've had an injury and who are claiming compensation are not going to necessarily get the payouts that they should have been entitled to.
And it's very complicated, Ian. So what the government have announced is they've said that actually the reason they've re-looked at it is because when claimants who are really injured, and they are very badly injured, get that lump sum, when they invest the money, they actually get a rate of return of between 0 and 1%. So the government has just said, well, what we'll do is we'll make sure that the insurers reserve for this at the same rate as you pay it out.
I mean, I guess there's an argument for saying, well, hang on, if someone is receiving a long-term compensation payout for an injury that's potentially going to be a very, very long-term, have lasting effects on their life, shouldn't that money being invested in ways that's going to generate a bigger long-term return for them?
And I think it's very difficult for government to say, yes, absolutely, you should invest in a riskier portfolio. So what the government have announced today is they've said, we'll assume that when the claimant gets their lump sum from the insurance company, they'll invest it in a low-risk portfolio, which I think is fair.
So like UK government gilts, something like that?
Something like that.
Yeah. Well, it's, arguably, then they should be spreading the risk a bit more than having it in, longer-term funds.
Yeah, but would you really want someone who's severely injured making that kind of risk? I don't want someone who's severely injured taking lots of investment risk.
Sure. So, all round, is this a fair thing? I mean, victory for the Association of British Insurers?
I actually think it's a victory for consumers.
Go on.
So the reason I say that is, if the government hadn't have done anything on this, you and I would have seen our average premiums in motor insurance go up by about £100 towards the end of the year as the insurers caught up with that move in the discount rate. Looking forward, I think motor insurance rates will probably stay about the same or actually decrease slightly because this will increase competition in the sector. So I think it's good for us. I think it's fair for claimants, and the insurance industry doesn't have to fund the extra amount that would have been required given the Ogden rate.
And very, very briefly, we've been talking about electric vehicles tonight. Are you getting your head around what that's going to mean for insurers and whether it's going to push premiums up or down?
I think it's really interesting for insurance companies. For a lot of insurance companies that write motor insurance, they've got to think 10, 15 years down the line, am I still going to get that income in? They're going to need to start thinking about their business strategy and their business plans.
All right, well, maybe you can come back another day and tell us all about that. Mohammad Khan from PwC, thanks for joining me.